Hello family, this is episode 5 on how to determine bias. Simply all the time try to ask yourself, where is price coming from, where is price currently, and where is price likely to move to. Don't try to complicate things, just those 3 questions will most likely save you the headache of trying to have 72 lines on your chart trying to figure things out. I love my charts clean. You see, it's just a box and line. Too much lines on these charts can bring more confusion. So today I want us to look at daily bias in unison with time frame alignment. This is a 60-minute chart, DXY, and what you're seeing here, we are in a bearish market. Then what should we do now? How do we know what price is likely to do? Look for a PDRA there. Remember, you've done enough from higher time frame and now you are in 1 hour. You want to take 1 hour as now your current higher time frame. You want to see which PDRA is respected, and from this PDRA, where is price likely to gravitate to very fast so that you are out of the market. Hope that one was taken deeply. So we have a gap here combining with this fair value gap there. So you see price rejected this high from that key level. So your eye should be down here, and even lower. So from this alone like that, you already know where is price likely to gravitate to. So this is 1 hour. If now I drop to 5 minutes time frame, because this is now where work is supposed to be done. Look at this. So I can do away with this one. When you're looking at this chart, you'll be surprised the things I'm going to tell you here now, because they're there, but because of you haven't maybe gone deeper into your studies, you might not be able to see them. But I'm going to pinpoint a few things here, and guys, I know you're gonna love them as very, very much today. So see price from price dropped here to this low and then went higher to a key level. What am I anticipating from here? Lower prices. But before you do anything, you want to know what time of the day, what session of the day are you dealing with. So I told you, go to Lux Algo, turn this on, and then you will see now we have London opening here. That is enough. You know now you are from here, prices has rejected a key level, very nice expansion lower, and then now I want to do the obvious things. If you've been here long enough, you know what I'm supposed to be doing now. You see, we had this bullish fair value gap was violated. It did what? Price tagged there and then went lower. I could not enter there because the kill zone London has not opened yet. Look close again. What do we have here? We have this fair value gap, bullish, and then we also had a bearish fair value gap. That is balanced price range. Now I want to give you something else. Now, because you see now when it's like this, you might not see anything that will help you scale lower. Look closer here. What we have here, we have a bullish fair value gap which was closed below, then price has come in almost to 50% of this fair value gap, and then now we are seeing price rejecting this almost 50%, and then this bullish fair value gap is overlapping with another fair value gap here. That is a higher probability PDRA. When the two PDRAs overlap, that is amazing, right? So now this is the kill zone. Now your entry can be there, targeting this low or session high that you can check on our time frame on the far left side. Now these ones, you are used to them. I want to open your eyes again today. Now that is one way of getting bias, but what else now? I know price has rejected 1 hour key level. I've zoomed into 5 minutes. That is time frame alignment. Now you're supposed to be aware of that. We are dealing with daily fair value gap look lower to 1 hour time frame. For FVG look lower to 15-minute time frame. 1 hour FVG look lower to 5-minute time frame. 15 minutes FVG look lower to 1 minute time frame for entries. I don't know whether you got that right, but hopefully you can rewind and write those time frame alignment down. Now, when we are in a bearish market, I want you to look at this. So this is a bullish market, bearish market here. So I want you to look at the down close candles in our bullish market. Look at this. There. Look at this one here. There. See that? So now I don't want to include, because you already seen the inversion there. So when we are in a buy program, or when market is poised to go lower, the down close candles in a buy program should act as a resistance to support lower prices when we are selling, or when we are in a sell program. Rewind and write that down. Now these candles here, when price closes below them, that should be an entry. They should support lower prices. Let me lock that. When these candles are there, when price closes below them, that should be an entry. That's why you are seeing price is not but closing above these down close candles in a buy program. When price closes below them, they should act as resistance to support lower prices. Guys, that is golden. Write that somewhere so that you can revisit later. So this is the London Kill Zone open, and you want to see now, because you've seen from 1 hour price is likely to go lower into this sell side liquidity and even lower. Then your work is to ask yourself, then now when the kill zone opens, how am I supposed to get in? Man, you see that? Must be interesting knowing these things. It's just fun. I love what I love doing this. It is something. Knowledge is power, guys. Don't fall into the trap of these guys who pretend to be some gods. No, you have a very smart mind that can dissect these charts in a way that you can understand them at your own level. So now another thing that I want to point out, so now when you have a 1 hour PDR respected in a sell program, you can use that 1 hour as your higher time frame, then scale zoom into lower time frame 5 minutes, and then you can get your entry there. Now I want you to look at this. If you were to enter here in this fair value gap, then where could you have placed your stop loss? Now you see we have a balanced price range here. I want you to place either the candle that has an FVG overlapping with this PPR there. Why? Because I don't expect price to close above here together, and also we have another signature here that is supposed to support price lower. So when you have two fair value gap like that, ensure that if you enter the first fair value gap, your stop loss should be slightly above the upper fair value gap. That is something that you should write down again, rewind and see whether you understood that, and then you can target your two RR there, or you can let the trade run to levels that you want to take your profits. Guys, this is a less than 15-minute video. You can rewind and rewatch until you master concepts that I've just highlighted here today. They are very straightforward, but you have witnessed that the same simple straightforward things are the ones that are helping me get some money off these markets. Hopefully this was very insightful, and hopefully you guys you are showing up each and every single day, because time is going. No one waits for you. No one is coming to save you unless you show up on these charts and make and create history and change your life and the life of those who look up to you. Remember to like these videos, engage them. That's how I know that you guys are finding value, and you can share and also subscribe to my channel. Until next time.